My name's Adrian Frinsdorf. I'm a director at William Buck and head of our wealth advisory. Today we have Magellan co-founder, chief investment officer and lead portfolio manager, Hamish Douglas. Hamish, welcome.
Adrian, it's great to be with you by video conference.
Fantastic. Well, before we get into some investment questions, I'm always interested in people that have been as successful as you, Hamish, as to what drives you to come to work. Obviously not meaning the motor vehicle, but what motivation?
Yeah, well, I think I'm very fortunate. I love what I do. In the Warren Buffett words, I kind of tap dance to work every day. I'm in a wonderful position. I'm in control of what I do. I don't feel like I'm an employee. I work with wonderful people. Many of them have become good friends of mine. I get to travel around the world. Well, not at the moment. I get to video around the world, but I get to meet really interesting people. Because of our scale, we get to interact with some of the best chief executives in the world and debate and talk around strategy and so forth. And the other part is I'm just not a portfolio manager. I'm a co-founder of a business, and I really enjoy the business side of things. I really enjoy working with the board, and Brett Cairns is our chief executive, is doing a wonderful job. And I just like the innovation and the problems we're trying to solve, whether it be in retirement or whether it was active ETFs, or whether it's going to be the new core series of funds that we've recently announced, trying to think about solving client problems, simplifying things and innovating. So, I'm just incredibly lucky. And one of the things, if you really enjoy it, it doesn't feel like work. And the one thing about investing, it just keeps changing. I'm not on a treadmill. Every day there's something different. This pandemic, as challenging it is, it's incredibly stimulating intellectually to think about how you're going to navigate around it.
Well, that certainly resonates with us. We've got an investment committee in it. We've got a lot of clients that are business owners, so I think the business part makes a lot of sense for them. I just want to talk about the investment markets. You mentioned COVID. It's obviously the biggest thing on our minds right at the moment, and I'd probably say it's, compared to the GFC, so far the financial markets have been better, but it's a much bigger social issue. I just want to get your thoughts on COVID at the moment and how you're positioning your portfolio.
Yeah, well, I would say COVID is very unusual and very different from sort of other sort of market-related crises. Even though markets are recovered, it doesn't feel like there's a market crisis at the moment. But we've got an intersection or a collision between a financial or economic crisis, and we've had enormous central bank and government support, and the markets are reacting to that. But it's also a healthcare or scientific crisis. And that's what makes this so interesting and also so difficult, because we don't actually know the length of the pandemic, and therefore we're unable to properly estimate really the economic impact. Normally in a recession and a financial crisis, you can come up with a reasonable estimate of how long you think it's going to take to recover and what the damage is and what the regulators are doing and what the central banks are doing and what government stimulus is doing. But we have no idea how long this could go on for. And the question of that is a scientific question. It's about the science behind a cure. And the scientists don't know the answer. We've got a lot of hope here at the moment, and the markets, I think, are trading off the back of a lot of hope, but hope isn't fact. And we need some data, and the data is going to come out of phase 3 trials, particularly these vaccine trials. And because we don't know, and I don't think anyone can know at the moment, we're cautious at the moment. Normally we would try and estimate, how deep and long a recession is. We just don't know at the moment. It will depend about the course of the pandemic. And the course of the pandemic depends upon science. And we don't have enough information. And the scientists, you speak to eminent scientists in this field, even people who are doing the vaccine research, and they're going, yeah, we've got some hope and some promise here, but just don't get ahead of yourselves, guys. This is a very, very complex problem they're trying to solve. And I think financial markets are simplifying the complexity of that at the moment, and have great confidence in central banks that can cure all things, but they can't cure all things. They certainly can't cure the virus, and there are limits of their powers here. So we're being cautious. We're holding some insurance I actually don't know whether there's an 80% probability we'll get to a virus or there's a 20% probability that we'll get to a vaccine. I use the word virus, I meant vaccine. That's very different. And the market implications are hugely different. If we get a vaccine in the next sort of 3 or 4 months from these phase 3 trials, and then we start rolling it out at scale globally in 2021, you can see what the markets are pricing. Then plus all the stimulus and the government support and the central bank support, we're going to have a recession, but it may be a fairly shallow recession that follows this, and therefore you'd expect markets to be strong. But on the other side of this coin, if we don't get an exit from this in 2021, and you get the second wave and the third wave, and you start to get enormous damage in emerging markets and others, you could easily then see in that world markets collapsing. The problem is I can't put a probability on each side of that coin. I can't tell you whether it's 80% probability we'll get out of this in 2021 or it's a 20% probability we'll get out of this. That will depend on the science, and therefore I'm kind of sitting on the fence. I'm not in this all looks crazy, we need to short markets, because I can see the scenario where the markets are being completely rational here, but I can also see the scenario if the science doesn't work here, that the markets are way ahead of themselves and we could have a major correction. And therefore I'm not betting on the people who are shorting this, nor am I betting on the huge optimists who are out there who are just backing the central banks and backing we're going to get to a vaccine. I just don't know. I really don't know, and I can't probability weight it. I think as we get more data on the science, the probabilities will start firming up, and at that point we'll have some decisions. So, I'm sitting on the fence. We're holding some insurance. We're being cautious and prudent at the moment, but it's a fascinating situation, and it's different to 2008-09, which was purely just a financial and economic crisis.
Well, that certainly resonates with our investment committee, and we really like that cautious approach, and thank goodness you're not betting, because we think some people out there are. But post-COVID, have you looked at what some of the winners might be and how this might affect various company structures and investments that might be winners post this virus?
It's a really interesting question. There are winners and there are losers, and they're an area of unknowns at the moment, if I would put it that way. And it's creating tailwinds and headwinds for different businesses. So some of the tailwinds are probably obvious: digitally related businesses that are engaging audiences on an online basis or in a digital sense. We're in video conferencing world at the moment, so people who have video conferencing businesses have had a mass adoption from people who would have never used them, and I think there'll be ongoing adoption from that. Maybe not quite at the rate we're seeing it at the moment, but those business models like Zoom and Microsoft Teams and things have been greatly accelerated because of this. E-commerce has been accelerated because of this. Video streaming adoption, like the Netflixes of the world, has been accelerated. These businesses are already going on, but clearly their competitive advantages are widening. If you think of payments at the moment, acceleration to e-commerce is great for digital payments, because when's the last time you paid for cash on delivery when you ordered something online? And now people are terrified of cash. Everybody's wanting to tap and go. And there are countries in the world like America, which was not tap and go, but everyone's now putting in the terminals for tap and go, because people don't want to handle cash. So clearly you can see winners being developed. A lot of it's the digital economy here where there are winners being formed, but there are losers. So on the other side of this, traditional retailers are having more and more volume taken away from their physical stores, and that really affects their economics. That was happening, but it's probably going to accelerate. You then ask the question, well, what's going to happen to the rents to people who own all the real estate the retailers occupy? As this accelerates, the rent's going to go down. So what's going to happen to those property values? And so that's certainly a question on people's minds here. If you think of industries like the traditional media industry, they were dying, but you think of television broadcasters, as more and more eyeballs now go to the streamers, those television economics are going to become more and more challenge. So I think it's accelerating the demise of some things. So if you're interested in deep value there, think of really deep value. It's just getting harder and harder in those businesses. Another accelerant is just low interest rates. We're probably going to be in an extended period of low interest rates, which is supportive of most business valuations, but I'd say low interest rates are terrible for banks. So whilst you think valuations are going up because of low interest rates, banks are having their earnings killed because of low interest rates. So, you know, you think it's generally everyone's a winner. No, there's a loser from a lower rate world. But there's also the unknowns, you know, the whole work from home. You know, is everyone going to move out of their office buildings? I go, well, the jury's out for me on that one. I do think people are going to get more flexibility who are in service-related jobs, and we're certainly thinking about that at Magellan. But we're not looking to downsize our offices because we think people will still want the ability to come into the offices and interact. And if you take all their desks away and things because you're trying to save some money on the rent, you know, we don't think that's a very sensible thing because you can give people more flexibility in the things. Forcing people to stay at home could be a major negative for your business as opposed to giving people flexibility to work from home. And people are talking about travel will never come back. Well, I do think travel, particularly leisure-related travel, will come back. I think it will take a while for the elderly to get on a cruise liner again because they're like floating Petri dishes. And maybe people have some long-term memories, but eventually people's memories will dampen and they'll get back on those boats. Business travel is a really interesting one. Video conferencing is hugely productive. So is business travel going to be permanently dampened, or is it going to come back? And that's a very important question because the whole travel-related industry is down in terms of share prices, and there are some incredible business models sitting there. You could think of online travel agency, you could think of hotels, you could think of duty-free stores, you could think of airports, you could think of equipment manufacturers like aircraft engines. You know, these share prices are down very materially. So getting a handle whether this is a permanent or just a cyclical issue for those businesses is a very, very important issue to think about with this pandemic. But you could have opportunities staring in your face, but if you think they're permanent changes and demand will never come back, you may completely miss them.
Well, it's certainly one of the reasons why we believe in active management internationally, and Magellan's a key part of that for us. If we move and past COVID, which is very hard to do, another big issue occurring this year is the US elections. And you must have models or thoughts about actions you'll have to take dependent upon what happens with Biden or Trump there.
Yeah, it's very interesting. You frame that, Adrian, as Biden versus Trump, but I actually don't think that's the real issue. It doesn't really matter who wins the White House in terms of what goes on in markets and portfolios, even though people may think it does, because you need to understand how legislation is made in the United States. You need to control Congress, which is the House of Representatives and the Senate, and you need to control the White House because the president gets a veto on any legislation. The polls are well out in front that Biden's going to take the White House, but things can change. And the polls are out in front that they're going to take the House of Representatives. But it's line ball what's going to happen in the Senate. So if the Republicans, which currently hold 52 of the 100 seats in the Senate, hold the Senate, Biden can't do anything radical in legislation other than pass a budget. There he can do executive orders, but things that need legislation he won't be able to do. And that's exactly what happened to Obama. He was snookered. But it's even more complicated than that if you really want to understand markets and where you may be concerned, because under the US Senate rules, you can't pass legislation in the Senate that's non-budgetary legislation without a supermajority. You need 60 out of 100 to break something called the filibuster, which means legislation can be permanently stalled by the minority party in the Senate unless you get 60 votes. And no party's ever going to get 60 of the 100 seats. That's kind of mathematically impossible here. And there is a debate going on with the Democrats, led by actually Obama, and he put it on the table a number of weeks ago. He goes, we should change these Senate rules, which we can do by majority vote. If we get majority of the Senate, change the rules. And everyone's been fearful, if you change them, watch out, next time somebody else will control this and you'll have legislation you don't like because there's no check and balance. But Obama's floated the proposition to the Democrats to actually say is if we change these Senate rules, if we win the Senate as well, we can pass our first legislation and we can enact that 2 districts the District of Columbia and Puerto Rico should become states of America. And how the Senate works is every state appoints 2 senators. So suddenly the District of Columbia, which is a tiny state, which is Washington, DC, which is very sort of left-wing leaning, just like Canberra is. It tends to be, bureaucrats tend to vote on the progressive side of the equation, suddenly becomes as important as Florida or California or Texas. And Puerto Rico probably leans towards the Democrats. So Obama's going, don't be fearful of getting rid of this rule if we win the Senate this time around. Let's just make these 2 more states and stack the Senate for the future to help the Democrats control the Senate in the future, which is a very tempting proposition here. If that happens and they win the Senate, then they would have full control to do whatever they want from legislation. And then you start to get in what type of legislation would they pass. They would extend healthcare reform. And therefore we've lightened up our healthcare holdings somewhat. We've sold Hospitals Corporation of America because that could be very negative for them, an expansion of something called Medicare, reduce the eligibility age from 65 down to 60, which would change the payer mix. The government pays a lot less than the commercial insurers do in that business. You could think of massive changes to energy. We don't invest in energy, but you know, the new Green Deal, where they want to invest trillions of dollars into green energy. And I think that is going to be the number one call where the Democrats may want to change the rules because they feel they're running out of time on climate change and they want to do something massive. And they can only do that if they control all 3 arms, they get the trifecta and they change the rules. So on election night, it isn't about Biden versus Trump, which was your first question. It's all about the Senate. And the Senate's a 50-50 toss-up. And everyone goes, the world's going to change because Biden's up by 9 points. Well, the real race, which is the Senate race, which is the only thing that really matters to markets, is 50-50 at the moment. And then it's going to be a leap of faith with the Democrats, if they get it, are prepared to change the rules. So on that, watch in November, watch the Senate race, because that's what matters to markets, and then start Googling filibuster and start listening to what the Democrat senators are saying, because the senators themselves are the ones who vote. It's not Biden. He doesn't get a vote on it. He can veto the legislation, which of course he wouldn't, but the senators themselves have to make that call, whether they're prepared to change the rules. So, you know, we're watching that, and, you know, if the Senate flips here, we may even have some further thinking about our portfolio, but we've moved on healthcare already.
Fantastic. Well, as you can see, you need to be a scientist, a politician, and do some investment management to run international money. But I wanted to talk about that. There's still a large amount of Australians that have a huge domestic bias with a chase towards franked dividends. You have led the way, probably with Kerr Nielsen before you at Platinum, in educating Australians about international investments. What would you say to those that still have this barbell approach of Australian shares and term deposits without much international?
Yeah, Adrian, a very important question. I would like to just call out, you said Kerr, and at Platinum, he's just announced his retirement. He's done a great service to this industry. He really brought global equities to the Australian market. It's been very, very important for investors. So, you know, I'd really, to Kerr, like to take my hat off and wish him all the very best. He's been one of the icons of our industry in this country. The simple message I would say to Australians is the Australian stock market is now less than 2% of the world's stock market. And do you really think the best investments and the best opportunities can be covered in only 2% of what's available in the world? Once you really open your eyes and you think about where the ball's headed in the future, where the very big trends are in the world, what we're doing is you think of things like payments, if you think about cloud computing, if you think about sort of software and the digitalization of the world, if you think about the new gig economy, if you think about these global business models, you know, we're not going to have 4 television networks that are wonderful businesses anymore. We're going to have 1 or 2 global streaming services, and they're not going to be listed on the Australian Stock Exchange, and they're going to play that game completely globally. If you're interested in Chinese consumption growth, you may be able to invest in treasury wine estates, but where are the Alibabas and the Tencents and the Nikes and the L'Oreals and the Estee Lauders and the LVMHs and the Hermes and the others that are incredibly leveraged to this side? If you want to think about biotech, where are the great biotech companies things? So once you start thinking about what's going in the world and what's changing, you want to have a menu available to you, and the menu is very, very short in Australia, and is a very small percentage of what's out there and is available. And particularly as these big businesses globalize, our global businesses, we've got a few of them. CSL is a wonderful business, which is a global business, but BHP, but there's not many truly global businesses that is where the ball is head at the moment. So, we're not saying people shouldn't have any Australian equities, and franking is actually a very important element for people. It's valuable, those franked income streams. But if you look at the total capital growth side of the equation, global investing has to be part of any sensible investment portfolio.
Wonderful. Well, that's all we have time today. So I'd like to thank you for your time, Hamish, and thank you for the wonderful contribution Magellan has made to our clients' portfolio and to the industry at large.
Adrian, a pleasure to speak to you. And I wish all the advisors and all your clients all the best at the moment. We're thinking of people, we know times are tough and there's a lot of uncertainty. So please stay safe, everyone.